Thank you very much. Good evening, everyone. I hope I'm very audible.
Yes, you are, sir.
Yeah.
It's a pleasure to be with you this evening. And I say thank you to my friend, my brother, Elder Patterson Aremundigo. It's a rare honor to have given me this platform to come share some of my thoughts with you. In the course of this session, I don't know how many minutes do I have. Um,
You have 1 hour, including the Q&A, sir.
Okay, thank you very much. So we'll be looking at my presentation in two parts. First will be the overview of the economic terrain, and then we'll go to the 6 strategies that I've curated for survival strategies during economic uncertainty. So please, if you give me the power to share, I'll share my screen so that you can also see my slides.
Please go ahead, sir.
Okay. One minute, please. Please confirm you can see my screen.
Yes, we can see.
Yes, very well.
Okay.
We can see.
Just like I say thank you again to the president and members of council of the ICAN district, Lagelu and district. You guys are doing a fantastic job, and you know that there is no country that can survive without the inputs of accountants. And you have always been the pillar of what is happening in our country today. They always say that when someone who is knowledgeable reigns supreme, you begin to see some economic corner turn, and you're beginning to see that things can actually work. Just like I said, as intro into this session, I'm sure majority of us, if I ask you, your operating costs would have increased at least minimally by say 25%. If there's anyone whose operational cost has not increased by at least 25%, you can please raise up your hand. Let's know how you're doing it and what kind of business you're doing. I am very also sure that if you take a stock in the last 5 years, most of our business models may have changed. You also see because it's like a direct response to what the economy is saying. If you also, I want to pause and ask you these questions to say, if your biggest client stops patronizing you tomorrow, how long do you think your business can remain profitable? That's a question to ponder on. If your biggest client stops patronizing you tomorrow, how long do you think that business can survive? Then in your line of business, what major risk is the organization facing? It's very critical that we ask ourselves some of these critical questions. We'll know that economic certainty is no longer an occasional event. It has become a permanent business condition in our terrain. Is the organization then built for stability or built for uncertainty? You need to also ask yourself this question. We know that economic uncertainty has become the new normal. Inflationary pressures, price unpredictability. You can wake up in the morning, something you bought for say 10 naira. By the time it's 2 p.m. in the afternoon, they can tell you it's already 15 naira. By the time you are going to bed, it may have become maybe 25 naira. That is the world where we live in today. Currency volatility. This is the protectionist strategy. I'm sure majority of us may have heard Donald Trump saying that I impose 15% tariff on so country. You can wake up and say, I don't like the face of Nigeria. I impose 20% tariff on them. What is it doing? Those are things that are affecting currency volatility. So what it's doing is to say that whatever product is coming from those countries had additional 15% tax to it. At the end of the day, it is the average consumer in the country that suffers, that bears the brunt. Because if the price was $100 and then you apply 15% extra tariff on it, then the price automatically moves by 15%. And then the the businessman will also have their own margin. So you wake up and then you see that price has gone. It will also live in a world where we see regulatory shifts. We can't even trust government again. They tell you something about economic policy. By the time they are going to bed or the following day, they are already changing it or doing something else. So that's the world we live in. Technological disruption. A perfect example is the EVs and the alternative energy. Today, if you are conversant with Lagos, I don't know much of outside of Lagos, but you see that electric vehicles have taken over the street in Lagos. Almost every nook and cranny, you see EVs everywhere. So I was telling someone to say, one day all this craze about petrol will disappear, because people are already planning. Now some EVs are even saying that buy and they come and install the charging point in your house. There are points in Lagos where you can drive your electric vehicles to go and charge, just like you are going to the filling station to buy petrol. Just go there, you charge, and then you go. And some charge, once you charge full, can take you almost about 500 kilometers. So you can imagine how long that can sustain people. So these are things changing the terrain of business. Supply chain instability. Recently, we heard about what happened on the streets of Hormuz, where US and Iran, they are slugging it out with each other. And then Iran says people must pay. US is saying we must collect. Now, US is collecting tariff on the streets of Hormuz if you want to pass. Do you understand? People are now building back channels to say, for us to do business, we must go around this thing. And building back channels means that additional costs to delivery. And when there are additional costs, they pass it on to the end users. One of the coordinators had already mentioned about changing consumer behavior. So people wake up today and say, I don't want this product again. Something you've created, you spent a lot of time to create, and then people just wake up and say, I don't want this again. Nigeria is in what I call post-reform stabilization to modest recovery phase. The IMF projected a 4.1% growth for 2026, which puts us ahead of global growth at 3%. But unlike years past, this growth is not oil-driven. We need to take note of this. Over 53% of GDP now comes from services related industries, telecoms, finance, construction, and trade. Look at the case of Dangote refinery. Activity and improved dollar liquidity are now giving us trade. Now dollar has been relatively stable. Why? Because we are no longer importing fuel, which means that the major consumption of our FX is actually importation of fuel. Now a whole lot of Nigerians are also patronizing homemade goods, because we have also developed capacity from within the country to also produce to international specification and standard, which is also affecting consumer behavior and taste. So, but costs pressure remains, because those things that were changing are actually moving to a new direction, and cost is still building up. Though inflation has hit from 24.5% from January 2025 to about 15.4%, 15.9 in June. Now I think it's about 15.4. That is some progress, yet it remains in double digits. So inflation in Nigeria is still double digit. Wherever you look at it, people argue and say, well, it's as a case of economic rebasing and all those things. But in actual fact, it is still double digit. Until we can achieve a single digit inflationary measures, we can't really say that things are piping down. Food prices, energy costs is a major factor in cost of production today. FX volatility continues to squeeze household and businesses. FX still remains at about 1,400. Before now, when it's subsidized, we used to have it at an average of, say, about 400 naira. So that means a whopping 1,000 has climbed on top of FX, which is also going to weigh down people who import raw materials for production. Man warning is very clear. Man is Manufacturer Association of Nigeria. They gave a warning which is very clear. And they said without structural reform, this disinflation is just fragile. So it means that there must be proper structural reform that must affect the way things are done in this country. So for us in finance, and I know people here are people who are very good with numbers and we're in finance, whether you also run a business, for us in finance, we see that CBN held MPR at 26.5 to anchor inflation. Yet private sector credit still grew by 83 trillion. So it means new money despite the fact that cost of fund still remains a little bit high at 26.5. It was somewhere around 27 plus before CBN eased it by some basis point down to 26.5. But credit grew to 83 trillion in June this year. Businesses are borrowing despite costs. So what are they doing with those borrowings? The challenge for us as chartered accountants is this: how do we ensure that credit translates to productive capacity and not just inflation? Across Africa, the story is resilience. Sub-Saharan Africa is growing at 4.3%. Africa outperformed growth in 2025, which means that Africa is the new oil, is the new baby everybody is fighting to come and cut. If you go through the streets of Lagos, Ibadan, that corridor, almost all the land on that corridor has been purchased by the Chinese firms. They are building, as a matter of fact, I had some couple of clients there. If you see the warehouses, in fact, what they do now is just to build warehouse. A particular company will just go there, build massive warehouse, and then is renting it out to manufacturers. So manufacturers will just come from China. They don't need to build anything. Infrastructure is already there. The warehouse is there. Electricity is there. Everything is there. Just pay and start producing. That is what our country has become. That is what Africa is turning to. We've seen the advent of different mineral resources that can help in building Africa. But it is still a tale of two ends. Nigeria at 4.1, South Africa at 1.1 GDP. And we still face a 1.3 trillion developmental financing gap. So you can still see that despite all this GDP rise that we're seeing, there's still a deficit of 1.3 trillion infrastructure gap in Africa, which means that there is a lot to be done in Africa. Distinguished colleagues, the role of ICAN members, as I've put it, I've never been more critical. In times of volatilities, stakeholders look to us for credibility because they believe that when you give advice, you are saying the right thing and you're talking from a vantage point of knowledge. They still look up to us for risk insight and for stewardship. So you can't afford to be lacking in some of these things at all. We must brace up, we must read far and near, we must ensure to know what is happening in other economies so that we can advise our clients. And you know that money chases value. If you don't have value brought to the table, nobody will be willing to patronize your business. Rising from this session, our task is to lead conversations that move us from stabilization to sustainable growth. Now, why do businesses fail? Why do businesses fail? So there are three common responses in an uncertain economy. One is panic, two is wait, and three is adapt. Do you understand? So panic destroys values. When there is economic uncertainty and you're panicking, you're destroying value. Waiting erodes competitiveness. Adaptation creates opportunity. Yes, during economic uncertainty, most businesses don't fail because of the economy alone. Please note this. During uncertainty, most businesses don't fail because of the economy alone. They fail because they fail to respond. Do you understand? Now, they respond probably in panic. Number one, they cut everything and survive. Do you understand? That's panicking. When you cut everything to say, you know what, let's just limit everything because we don't know what's going to happen. Then you move to immediate cost slashing, you start firing staff, you stop all investment, you start holding cash, defaulting on commitment. When you default on commitment, you are losing credibility. By the time the economy bounces back and creditors, they will be unwilling. They'll be unwilling because already they've seen you as somebody who defaults. There was a point we read that Ghana defaulted on their sovereign loan. It's a bad image, and then you see Moody rating, they will rate you very low, that investors around the world will now not want to come to your country or come to your aid. Decisions are driven by fear, because of the news they hear and this, and it does destroys capability. You cut muscle with fat, key talent, research and development, and all those things. It signals weakness. When you panic, it destroys your capability, it signals weakness, and then in the short run, the business can survive in the first quarter, but by the time you are going to third, fourth quarter, all engines of growth are paralyzed already. In Nigeria, imagine a case of NPR at 26.5 and inflation at about 15. Panic borrowing at high rate later becomes even more expensive. So you don't want to do that. Then the other one I said, part of the response is some people wait. Do you understand? They wait. Will this pass? Let's freeze. That's their own option. They say, let's hold on all decisions until things stabilize. No new products. They are not hiring anybody. They are not doing price changes. No investment. Business goes into hibernation. When you do this, markets don't wait for anybody. While you're waiting, competitors adapt. New entrants come in. Customer habits change. In Nigeria, service and fintech grew by 53%. You remember when we had COVID-19 and people were no longer going out, we were all indoor. That was when people knew that you can actually order food and they can deliver amala gbegiri and they will do it to your house. Do you understand? Even Mama Puts that is selling beside the road now has a bike man that does delivery. They package the food, they go out and then deliver. While you wait, costs still rise. Inflation, FX, energy don't pause because energy consumption is stagnant and it's going up if you don't do anything. Waiting means your cost base erodes margin while revenue is flat. Because you're waiting, revenue is flat, but your cost margin is still going up. Then you lose momentum. Teams get demotivated. Talents leave. If you wait, you are not responding to economic realities. Top talent will not wait because they want to make something for themselves. And by extension, that affects your business. So by the time you unfreeze, maybe you are 12 to 18 months behind what competition is already doing. And that is really not good for business. So waiting feels safe, but in volatility, inaction is the riskiest action. In volatility, inaction is the riskiest. Yeah. So the third response is adapt. That is reposition for the new reality. Accept that the rule have changed. I don't know if anybody here has read the book Who Moved My Cheese. Do you understand? You cannot afford to wait. You just have to adapt. Then re-engineer your pricing, your product needs, cost structure, funding, customer segment. You must make deliberate bets because if you do that, that protects cash and growth. That helps you to utilize the downturn. Credit is expensive at 26.5 NPR rate, but private sector credit still grew to 83 trillion. So those people who are taking money, what are they doing? It means there are still customers who are patronizing. You just need to readapt to what exactly is moving. Maybe your business has been the traditional one that people come to you to come and do whatever they want to do. But now you have to take the business back to them. They can no longer come to you. You have to export your trade back to those customers who will now give you the cash flow. It also builds trust. Transparent communication with staff, with your banker, and with everything that you're doing also build trust. Do you understand? In uncertain times, credibility is currency. Credibility is currency. You must maintain your credibility in an uncertain period. Adaptation is not about doing more. It's about doing different. It's about doing different and even faster. As in times like this, I will say again that businesses fail because leadership confuses liquidity with strategy. As chartered accountant, our job is to help board members that we advise move from panic to discipline, where we are burning cash with no return. Move from wait to scenario planning. What if inflation stays at 16%? What if inflation drops to 12%? What if inflation goes back to 25%? We must play every scenario for board members that we're advising, for people that we are consulting for, even for our own self. We must play different scenarios to give different outcomes so that we can have handy strategies and opportunities that will help us. And then move from adapting to executing. Which two bets will you fund even in a downturn? So even in a downward or uncertain economy, there are businesses that can still thrive. So which of these businesses will you put your money on? Economic uncertainty doesn't kill businesses. Delayed decisions do. Panic kills capability. Waiting kills momentum. Adaptation builds the next market leader. I hope that this overview has been able to position and put some light to how businesses should actually when we're in economic uncertainty. Do you understand? So before I go to the next phase of my presentation, I would like to know if there are questions that you want me to take, or if there are areas you feel I should go back and touch on, or if you're okay, we can go on to the next part of the presentation. Hello, am I still audible?
Yes, yeah. Please, let's proceed, sir. We'll just collect everything to the end of the session.
Okay, thank you very much. So the next part is going to be talking about the 6 strategies of surviving and thriving in an economic downturn. Number 1, I said protecting cash before profits. They always say that cash is king. So you need to protect cash before anything at all. There are scenarios where they say some businesses can be making profits, but when there's no cash, that business will collapse one day. And I'll give you a typical example. I sit to supervise the treasury operation of my organization. So we placed money with a particular organization. But before we do that, we profile these customers and we ask for their AFS. We look at it 3 years. And then we saw that they were making good profit, business afloat and everything. But that business, there was no cash. So when we placed money with them, I think it was a 90 days placement. So by the time it matured, and I ensure that in one of our treasury policies that if I'm placing money with you for the first time, I call for the money at maturity. I can replace again with you, but at least you have to prove yourself to me, and then we can continue to do business. So we called for the money, and then it became an issue to be like, so please give us some time, this and it. On paper, the business was doing well, but there was really no cash. So that is why strategy number 1 is that cash is oxygen. Profit is vanity if you cannot make payroll next month. Because if you can't make payroll, your staff will not listen to the fact that your business is profitable. What comes to their pockets is the cocoa. Your creditors that you've taken a facility, they want their money. They want the interest. So you must protect cash. Strategy number 1. Now, what do? Create a 13-week cash forecast, more like a 90 days cash forecast. This is not the time that you're now saying you are sitting down on a 1-year projection, 1-year cash. No. You have to create a 13 or 90 days cash flow forecast and must be reviewed weekly, not monthly. It must be reviewed weekly because in an economic uncertainty, 24 hours is even too long for things to happen. Do you understand? Track inflows versus outflow by customers, not just by line item. So you must know the customers who pays now. You must know the ones that will pay in 24, 48 hours. Do you understand? You can't afford to give credits more than 48 hours at this period. Do you understand? So somebody cannot say, give me this product and then I'll pay you in 2 weeks' time. This is not what will happen during economic uncertainty. Every kobo of yours must be collected in less than 48 hours. Every sale you are making, if you are not selling, know that you are not selling. Let your goods be there as inventory. Do you understand? You must collect and track it. Then I call something working capital sprint. Chase receivables aggressively. So you must chase receivables aggressively. I know we're all conversant with the Igbo traders. They can sell even at a loss when there's a need for cash because they know that loss they've made on that particular item will be recovered on another item. Do you understand? When they make that sales. So because cash is king, they understand that analogy and that strategy. So they would rather get that cash now so that they can turn over that business. So you must chase your receivables aggressively. When somebody says, I will pay you 3 p.m. tomorrow, do you understand? By 8 a.m. tomorrow, you're sending a message to the person to say, thank you, Mr. Wale. Based on our conversation, you promised to pay me by 3 p.m. tomorrow. And by 12 midday, you're sending a reminder so that he doesn't think you've forgotten or that something has affected your brain. Do you understand? you must chase receivables, renegotiate payables when there are things that must go out. I used to work with one man, and interestingly, when I was very young in my career, this man would tell me that, Kunle, you know what my friends call me? He said they call me Omo Ara. He said Ata Matawi Ara Matiti Sonwu. That's his own name. And I was like, he didn't really down on me what he was trying to say. So if he buys from me, he doesn't want to pay. But when he sells, you can't hold him. That's what he's saying. Do you understand? So renegotiate payables, cut inventory to 30 to 45 days. If you're in the production sector and you keep inventories for more than 45 days, that's a wastage. That's capital on the table, sitting idle, doing nothing. So you cut inventory to 30 to 45 days. What you can use in your cycle of production is what you should keep as inventory, because you don't know what will happen the next minute. Because if you produce now with this particular cost outline, you don't know what will happen next week. Maybe costs would have shifted in your favor or against you. So, and I said earlier on that cost of capital is still a bit very expensive. So carrying inventory more than 45 days is also going to be very, very expensive, and it's going to hurt your books. Then I said adopt zero-based cost review. Do you understand? Don't do 10% across the board cut. Cut 100% of non-core. Protect 100% of revenue generating spend. So if your car is the one that makes delivery for you, you can't afford not to service that car and say, because economy is bad, I will post-date the time of servicing this car. Or maybe your staff who are the ones doing your core work for you, say economy is bad, I can't pay your salary now. If the guy leaves tomorrow, how are you going to generate that revenue? So the strategy here is that cut, don't say we are applying 10% cut across board. No, that's not the way to do it. You look at the non-core. You can cut it 100%. That this ones, if I don't, for example, I don't need to buy a new car. Do you understand? Let's make do with whatever it is that we have. The things you can cut 100% that will not affect your revenue, you can cut it. But the ones that will affect your revenue, you can afford to do that. As accountants, we must also move CFOs from P&L management to cash conversion cycle management. So we must also know that when we're advising our people or when we're advising ourselves in our own business, move and don't say I'm the CFO of the company. So I'm just looking at the overview. You have to move from P&L management to cash conversion cycle. So the items that sits there that are not being converted to cash, you are leaving money on the table. You must put people across it to say, you know what, whether you've been giving them 1 month to convert to cash before, you now shrink it and say, you know what, under 2 weeks, this must be converted to cash. That helps you to protect cash. Report and arrest cash runaway items. Very, very important. And look at that in your business. Please note that in a downturn, the economy with the longest runways wins, not the ones with the highest margin. The economy or the business with the longest runway, which means you have cash to be recycling your business and then weather the uncertainty till things become abated. Those are the businesses that can win. I'll move to point number 2, which I call diversifying revenue streams. How do you diversify revenue streams? Today, you agree with me that if you look at Dangote today, for on this platform, has used 1 or 2 products of Dangote today. You may have used his soap, you may have used his detergent, you may have ate his spaghetti, you may have ate his macaroni, maybe you are building, you may have used his cement, now he's selling fuel. Majority of us have used one of his products. It means we wake up one day, at least each one of us is giving maybe 10,000, maybe 5,000 to Dangote every day. So diversify revenue streams. Don't spend on one product, one customer, one currency. No, don't do that. What to do? Try product mix shifts. If food inflation is biting, shift from premium SKU to value packs. Do you understand? So today we've seen, I entered the Chicken Republic, and then every time they advertise, they say Caribbean rice combo. They say entire pack 1,500. So they move from the usual, you spend average of about 7,500 or 10,000 to eat there, to a minimum 1,500. Why are they doing that? There's a guy that has come up with a business model. The guy is called Item 7 Go. I don't know if anybody have seen that guy or that business anywhere. You enter that guy's store, just a pack of rice. I think it's about 1.5 or 1.3. He has small meat, he has rice, he has plantain. At least you eat, you go. So he has given the big names a run for their money, and he has branded his business even as more beautiful than the likes of Chicken Republic. So naturally, the guy is commanding the crowd. So that tells you something. You must learn how to retweak your product mix. It is very, very important. If FX is volatile and your business deals with importation of raw materials, add a Naira denominated service to whatever it is that you're doing. Look for somebody that sells that thing locally, or shift to something that is local that you can buy, so you don't have to go through the rigor of getting FX. You must be able to redesign your business. Master customer diversification, reduce concentration risk. Government contract plus SME for people who are just solely on government contracts. You remember the time when contractors had to gather together and say they want to fight federal government because their monies have been delayed for more than 12 months, this and that. Government is saying economy is not good, this and that. So imagine if that person has to feed his family. Imagine if he has to run his office. What is he going to do? Do you understand? So this is telling you that you can't just base on government contract alone. So what are the other things that you need to do? For example, let's say you're a contractor that builds and you're only getting contract from government. Who says you can't be a Dangote distributor for cement? Who says you can't be a distributor for iron rods? Who says you can't be a distributor for building materials? Who says you can't start producing or selling tiles and some other things? Who says you can't diversify into electricals? Do you understand? If you are a chartered accountant and the only thing you do is to consult people and to do AFS, who says you can't go into loan intermediation? Who says you can't go into factoring, where you now have to discuss people's bad loans and then sell it to other people and make a commission out of it? Who says you can't diversify into so many things? Who says you can't be an economic advisor or financial advisor to people, how to package their facilities and all those things? So you cannot just be looking at one jacket to say this is where money will come from. You have to be able to think outside the box. And today we have AI. AI is there. You can trigger it. You can ask it so many questions. You can look for experts in that field to also ask questions, and they will tell you this is what is making money today. Today, a whole lot of people are making money. I recall when Netflix said there's a minimum standard that your movie must attain before they can acquire your movie. And for you to achieve that minimum standard, you need a very deep pocket to be able to produce to their specification. So some people who couldn't match the likes of Kunle Jimber, even though First Bank says he's owing them more millions of naira that he used in producing some of his series like Anikulapo and co. People who could not muscle that kind of financial power. What did they do? They produced their low budget movie and moved to YouTube. YouTube will allow you post anything on your channel. It's just there. If it gross views, they pay you money. If it doesn't gross views, it's there. So you move it there, and then you can start advertising it yourself, and people can start watching and pay you money. So it tells you that you cannot just remain static and say this thing is not working. It's not working because you are not trying to see other areas where things can work. Follow geography and channel. Have digital channels. Export within ECOWAS. B2B if B2C is weak. Service grew 53% of our GDP last year. Service grew 53%. Before now, it used to be oil and gas. Now it is service that is controlling the GDP. That's where the money is moving. So don't say it's not working. Today, majority of my purchases has always been online. I have not visited any store recently. Anything I want to buy, I just go online to type it and search for it. So if your own business is there and you're not advertising online, whether it's consultation, whether it's financial intermediation, and you're not advertising your media, your business, you are not projecting your image, do you understand? Releasing documents of value, speaking to what is going on in the economy, how will people trust you? How will people know you? When they Google your name, what do they find? Or your business is not even registered under Google LLC, where people say the top, let's say they are looking for financial consultants in Ibadan, and they say Google, give me top 10 financial consultants in Ibadan, and your name is not there. How do you then make money? Do you understand? So these are some of the things that you have to learn how to do, and then the internet will start rewarding you for doing some of these things. A manufacturer hit by import cost had a local sourcing line to it. That's the simple thing he needs to do, so that he doesn't have to suffer the recurring problem of FX. Diversification is not about doing more things. It's about having 3 ways to make money when one way breaks. Do you understand? That's simple diversification. It means that you just create several other channels, maybe 2 or 3 other channels to make money when you see that this one might run into trouble. That's the simple truth about diversification. And when you diversify your revenue source, you cannot be stagnant. That's the reality. So please, I'm begging us today to say, let us think out of the box. In that same situation, every area, every focus, every business facet that you are in today, there are lots of things that you can do that can help you diversify your revenue source. I'll give a typical, very realistic example now. In the school where my son goes to, you have teachers today who will come and complain that salary is poor, they are not paying us well, blah, 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 blah. Now, there's a particular teacher, this guy teaches mathematics and physics. So he approaches parents and says, can I be doing extra classes for your child? Now, he charges 60,000 per month to do mathematics and physics. Now, imagine if this teacher has 20 students and he only does it 3 times a week. Do you understand? So you choose your 3 times a week, 1 hour. So imagine if he has 20 students that is doing that for 60,000 a month times 20 is 1.2 million. It means this teacher is getting extra 1.2 million apart from his salary. Now, if he's able to save 1 million every month, in 12 months, this same teacher would have saved 12 million. That means conveniently in 2 years, this teacher will buy a car. And then his other colleagues will be thinking, how did he get the money? Where did he? Because those ones are still on the 9 to 5. They teach the children, then they go and they complain. Even this, our salary of 150,000 is too small. The school proprietor is the only one making all the money. But see another teacher who has diversified his revenue. He looked within the box where he is and said, okay, what are the opportunities I can do? There's another teacher that teaches mathematics on YouTube. All you need is just subscribe. You pay little amounts to subscribe, and then it gives you opportunity to view maybe for 2 months or 3 months. So it's on a monthly or 2 monthly subscription. These are people diversifying sources of revenue. And until we get to that point, we'll continue to complain. But really, in an environment, in a population of over 250 million people, there's enough to go around. All we need to do is to diversify the revenue source. Point number 3, building strategic agility. Building strategic agility. Annual plans are dead. These are not the days you make plans and say 1 year plan. You know, in those days when we're growing up, you make a budget, you make your year, you say your New Year resolution. Your New Year resolution can become obsolete before end of January. So you have to make what they call monthly and quarterly pivots. So what do? Scenario planning. Number 1, run 3 models. For example, now we say inflation has dropped to about 15.4. Run a model and say if inflation stays at 15.4, what happens in the next quarter? If inflation drops to 12%, what happens in the next quarter? Now, if inflation goes to 20%, what happens? So you must play the devil's advocate. You must play that 3 scenarios. For you, it remains where it is. It goes in my favor, it goes against me. What do I do? So what do you do in each of these scenarios? That should be your plan. Why do you think banks are posting huge profit in this harsh economy? Let's pause and ask ourselves that question. I've done sufficiently 23 years banking before I moved to green bond finance. Now, so all in all, I have about 26 years experience in this finance thing. There was a particular bank, I won't mention the name, where we were then. We were doing MPR every Friday. It means that we'll work Monday to Friday afternoon. Then the regional director will gather everybody and say, okay, he will come from Lagos. He was the deputy managing director then. He will come from Lagos and say, okay, you guys, Tell me what has happened this week. Tell me what you're doing next week. It was putting everybody on their toes. It was a periodic planning. So people were making forecasts, people were making promises, people were going after businesses. That's the way, and that's the reason why you see that banks like Access, UBA, GT, they are very profitable because there is no room for resting. They are tweaking the plan like every other day. They are tweaking the strategy like every other week, every other month. So what you say this month is not what you're going to say next month. You know, when you leave people naturally and when there are no consequences, the flesh misbehaves. People just want to gist away, just want to relax. Even your workers, if you don't monitor them, as small as your business may be, give job descriptions to every staff and give KPIs. What are the indicators to monitor performance? How do you know that this person has worked and is due of his wages by end of the month? Otherwise, as the business owner, you will be the one suffering. You'll be the only one working. They will just come to work, gist away, waste your energy, waste your space, and then at the end of the month, they'll still collect salary from you. And there's no metrics to measure their productivity. You must stop doing that. There must be what they call a periodic planning. And it has to be on a monthly basis, at least in the minimal. If you're very agile, you can do on a weekly basis. Decision cadence, monthly executive reviews on pricing, supplies, staffing, speed, beats, perfection in everything that you do. So as a consultant, what are your guys bringing in? Apart from the fact that you've given them works to do, you've given them things to do, the job or the portfolio you have given to them, how well have they grown this portfolio? There was a time in my career, I opened one particular account. I never knew that account has massive opportunity. Guess what? I opened that account, I think it was in 2007. I opened that account with just 50,000 naira. By the time I started moving with this customer, discussing and everything, in 3 months, a 50,000 naira account grew to about 3 billion in 3 months. Honestly, you would not know if I wasn't moving with this customer, discussing to say, we can do this, we can do that. And then the customer started suggesting, okay, let's do this, let's do that. Do you understand? That is the power of review. That's the power of sitting down to think strategically. And that's the power of also giving budgets to your staff. Do you understand? Don't say this person is a back office staff. Give everybody a milestone of what to achieve. Whether they will do it or not, give it to them and say, this is a yardstick, this is a measurement, this is what you're supposed to do, these are your deliverables. And you will be shocked how well and fast your business will grow. Empower front lines. Give sales ops authority to adjust pricing. Don't let your business revolve around you. Some people don't know how to delegate, and it's a very weak characteristics of some leaders. A leader that does not know how to delegate is a weak leader. Don't let it be that it is only when you are around that things happen. Things should happen when you are not around. That's the only way you can know that you're a leader, because you have replicated your abilities and capabilities in other people. If you don't do that, you'll be bogged down, you'll be weighed down, every decision comes to your table, or you are so tight-fisted that you want to see everything that is going on. Your business cannot grow because you are not a monopoly of ideas. People should be given opportunities to exhibit their intuition, their ideas. It is when they now fail in what you are giving to them to do that you can now caution and say, okay, when next you're taking this decision, please run it by me, because you have an antecedent of not doing well. Do you understand? So when you give in to diverse ideas and opinions, people suggest things that can also help to grow your business. A very good example of this was that all of us remember the bank called Intercontinental Bank. They call it Happy Bank, Happy Customer. Do you know that Erastus Akingbola grew that bank from one particular strategy? And what's the strategy? He calls the branch manager and says, this month you made a profit of 50 million. Can you make 200 million profit next month and I give you 10% as commission? That was what Erastus was doing. Imagine a manager now look at it and say, I should make 200 million and then you give me 10%. Now, the guy runs around and makes the 200 million from 50 million. 10% of 200 million is just 20 million. Remove 20 million from 200 million. That means that guy has delivered 180 million, extra 130 million to the bank. And he's happy because he's been given 10%. That was all. In fact, he got to a point that he gave one of my friends who was in that bank, because that was his car. He gave one of my friends a car. He said, that guy was in around the Apapa area. He said, Can you make this profit? And I promise you a brand new Corolla. That was his first brand new car he ever made. Do you understand? So give incentives to your guys. Do you understand? When you challenge them, reward them. That's what brings loyalty. Don't challenge people. They achieve the result and then you keep it in your pocket and you now think that all will be well. That will not augur well. They will move to your competition or divulge your secret to the competitors. So it is very, very important. Agility is the ability to change direction without losing momentum. Like I said, build strategic agility. And agility is the ability to change direction without losing momentum. The same momentum you are using to do this business. When you change direction and you see the trend with which the economy is going, use the same momentum to chase the new ideas and your business will be better for it. I move to point number 4. Point number 4 is investing during downturn. So some people say if you are a trader who trades online, they will always say that buy when market is low and then, sell when it's high, So investing during downturn, the mindset shifts. Downturns are when market shares is bought very cheap, when everybody feels, this thing is bad, this market has collapsed, and everybody's dumping it, then it continues to go down. Then you now see the spike going down. For people who are traders, you see everybody's dumping it. That's actually the time to buy because it will rise again. By the time it gets, they said he who is on the floor fears no fall. Do you understand? By the time it gets to the rock bottom, it will come up again. Counter-cyclical bets. Competitors are cutting marketing, training, tech, maintain brand spend, and automation. Do you understand? So when others are laying off, the good hands, a performing guy, they just said they should go, who has great portfolio, but because market is down, during COVID-19, when everybody was at home, a lot of the big fours cut their staff. They said they should go. In fact, a lot of oil companies laid off staff. Do you understand? That's the time, if you need a staff, you need a very good talent. That's the time to go and hire one. Do you understand? So it is very important that during distress, you also don't lose sight of investing. That's when people want to sell their properties. You see for sales. I want to japa. During the japa sale, a lot of people sold their properties in this town, lots of people sold because they want to go to the greener pastures. When you buy those things, when you invest in those things at that time with the cash, remember we said cash is king. It is because that cash, you have it. And when you protect cash, that's sorry, somebody.
Please pardon on the interruption. Somebody was interrupting. Please proceed, sir.
Okay, so when you protect cash, you have the opportunity to invest when there's economic uncertainty. Because when there's economic uncertainty, remember, most people respond by panic or waiting. Do you understand? And those who respond by panic and waiting, those are the people that will lay off. They are the people that will sell. Some people will even sell their factory and say nothing can happen again. Do you understand? So those are the time to get all those things. With around that time, with credit tight, some firms will sell cheap because they don't have access to loan, use equity or structured debt to buy around that time. So you can approach your banker if you have good pedigree with them when things are down. Approach them, use debt to buy. As long as you're using the debt to acquire assets that is not going to depreciate over time, you will be able to pay back the loan and you'll be able to make margin when the market bounce back. Invest only where you have a clear 18-month payback plan. Do you understand? So when you're investing, you also need expert opinion. Don't go and invest if the historical record on a particular asset or shares has shown that even in 60 months, this thing has never risen to anything. Why should you go and invest in it? If there's a particular area that there's no development, nothing is going to happen, and you've checked, there's nothing gazette under the government law that things will happen around this area, why should you go and invest in that area? So you must also take calculated risk. You must check and be sure that there is a way out in 18 to 24 months from this place where I'm going to invest. With private sector credits, like I said, that grew by 83 trillion. Banks are still lending. No matter how uncertain the market is, banks are still lending, but only to firms with a plan. It is when you have plan and they can see your plan, they can see your blueprint. Banks, they know how to study business proposals. When they see it and they know that, no, this one will make money, then you can. It is not something that is bad to borrow, but don't borrow to consume, borrow to invest. You don't build a house in a storm, but you can buy the land in a storm, because the storm will not carry the land away. You can't build around that time. So you now wait for the storm to settle, and then you start to build. Point number 5. My 5th strategy is turning risk management into competitive advantage. How do you turn risk management into competitive advantage? Risk is not just compliance, it is foresight. Do you understand? So we have people who are in risk management, and their approach to every issue. For example, I'm a banker. So when you ask the man in risk management to say, analyze this credit, analyze this request, his point is always from the dangerous angle. It's always about, what if this customer dies tomorrow? It's always about a very recent one. So there's a customer who builds shops and more around Balogun Market. And then I approach this customer and I say, okay, let's fund some of these your projects. Blah, blah, blah. Do you know the first question my risk man told me? He said, what if this house collapses? I said, how come that's the first thing that comes to your own mind? That the house, but that's his own training. Do you understand? That's what he's been trained to do. So in every risk, what are the opportunities that are there? What are the opportunities? I recall when I was managing some accounts in a particular bank, they had loan up to about 7 billion that I was managing. There were about 8 companies in that group. Do you understand? So there was a time, these guys are Indians and they were taking big risk. There was a time they needed facility on dollar, and they wanted to take a $30 million facility and we programmed. And I said, okay, so what are you going to do? Then I said, well, let's go to CBN and find out if we can do a forward contract. Forward contract, let's peg this interest rate at this point. That's the rate of dollar is now. We'll pay some premium on it. And you know what? They did it. And honestly, they took the facility, brought in their engines, their machines. In less than 2 years, they've actually made that money because we have the population. So in every risk, there are opportunities. So what should you do? Look at the credit risk scoring. With defaults rising, segment customers by risk, tighten terms for high risk, and extend for low risk. When you say high risk business, charge them premium. Tighten the stance for them, shorten the tenor. Do you understand? Monitor the things you can do with them. When you see a low risk person naturally will be asking for concession, but you can only make money from a high risk person. So risk is not bad in itself. It's just for you to be able to analyze it and turn that risk management into competitive advantage. Then I talked about governance as a product. Publish transparent report, stress test result, banks and investors pay a premium for it. So as accountant, I believe that when you're also advising your customers or your clients, and they're giving you cash flows and everything, how well do you stress test that cash flow? How well, if you increase costs by, say, another 20% and reduce revenue by 10%, is this still going to produce profit? Is it going to be favorable for the customer? So we must give detailed oriented advice. That's the only way customers that you consult for, businesses that you consult for, and they do well, they make money, they will come back to you. They will always be your customers. They will always refer people back to you. And when you also do that in your own personal business, being the person also in charge, you will see the effect on how it rubs off on your business. This is where we want chartered accountant to lead the conversation. We should turn risk registers into board strategy sessions. Do you understand that? Where we can tell people that, yes, this thing is actually very risky, but we can make headwinds out of it. But we can do this, we can do that. In volatile markets, the company with the best risk radar gets the cheapest capital. So, in companies and in areas where you can analyze your risk and you have an understanding of your risk, people will not be scared to invest with you. But it is when you amplify the risk beyond even the ordinary, beyond the returns, that's when people get scared to say, I remember there was a time I was traveling. I wanted to go somewhere. And then my son said, are you going to go through Lagos Ibadan? I said, yes. He said, what if bandits attack you? He said that thing once. He said it twice. Then I sat him down. I said, yes, we had the news of bandits and all this, but it's not like they're always on the road. It's risky, but I'll go through time. This is the time I'll get to where I'm going. And I know that the state government has also provided securities on the way. So I was analyzing it for him to make him understand that it is not as bad as you think. So people see risk. Some risk managers have amplified the risk. Some accountants have amplified the risk. And they never see anything that is like a respite in it. So our own work and responsibility these days is for us to do proper analysis and also bring this inherent in. I say analyze their risk very well and will have investors and businesses patronize them. That is it, because investors, they want peace. They want you to give them respect. They want you to give them the assurance that if they come you, if they patronize your business, things will get better. They want you to tell them that don't worry, we are into this together forever. That's the only way you can reassure patronage in an uncertain economy. And then I'll go lastly to my last point, strategy. Making trust a strategic asset. Making trust a strategic asset. Without trust in business, you are nobody, honestly. And trust is like a currency, do you understand, that can guarantee repeated sales, that can guarantee patronage. In downtimes, stakeholders don't bet on the smartest, they bet on the most credible. If you are so smart, they can say this one will be 419, he's a swindler because he appears too smart. But when they see that you are credible enough, they've tested you over time, your trust is not in question, that's the only time you can make evidence. So people will be willing, even when business goes down with you, they'll be willing to sit down with you to say, you know what, can we negotiate this thing? Can we work it out ourselves? What do we do? Your employees will have an understanding. When you communicate, explain the why before you start cutting. For example, you want to propose a salary cut. For example, you want to propose, maybe you are taking away a particular benefit from them. You must be able to communicate with them. They must have seen that truly Oga is saying the right thing. You know, your customers must see when you are changing price, your customers must know why you're changing price. For example, today you want to, maybe you're in haulage business and you're saying prior to now, you haul this truck from this location to this location for 100,000, but now you want to change it to 120 or 130,000. You must but in the midst of you explaining that, your customers can tell you that why not convert to CNG? Most people are using CNG today. You see, and that's why you can't trust the public transport guys. They are still charging at the rate when petrol went up. But let me tell you, 75% of these guys have gone to CNG, and CNG is almost like 8 times cheaper now for them, but they still remain at that price. You can see the insincerity in some of the Nigerian businesses. But when you communicate and you make trust a strategic asset, you will have more patronage and you have more businesses. With your employees, over communicate, let them know what is happening, explain the why behind the core, protect core talent. Don't let your core talents go. With customers, don't hide price increases. Don't go and hide the measurement and then put the price and then they are getting less value. Explain input cost drivers, offer alternatives if they were willing to take it. With banks or investors, you have to protect, be proactive in disclosure, show your cash forecast, covenants, mitigation plans, trust. All these things will help you to keep and retain your customers and survive that business uncertainty period. With regulators, early engagement on tax. Now, NRS is here. They are breathing down on the neck of everybody. You guys are the most critical because people will start running to you for their AFS, for their ombudsman to explanation with the taxman and all those things. So you must engage as early as possible and avoid surprises. Don't also now be the one that is guilty of not paying the same tax. Don't also now be the one that is guilty running the tax that you are somebody that will run to say, okay, come and help me with this filing, without filing. So you should know the right thing to do and at the right time. It is very, very important that you get all these things going. Why does it matter? With foreign reserves at about over $50 billion now and dollar liquidity improvement, banks still ration credit. It's not everybody they give money to. They lend to who they can trust. That is why trust as an asset is very important. They will talk about the 5 C's of credit, and part of the 5 C's of credit is character, and your trust is your character. So if you meet all the other 4 C's and your character is shady, nobody's going to lend to you. Your character matters a lot when it comes to business, especially during business uncertainty. Trust compounds. In good times, it's nice to have. In bad times, it's the only thing that you have. Trust compounds. And in good time, is a nice thing to have. But in bad times, trust is the only thing that you have that can help your business to succeed. Now, in closing, a downturn does not create new problems. It exposes old weaknesses. These strategies above don't guarantee you will grow, please note, but they guarantee you'll be standing when the cycle turns. The organization that will win the next decade are not those that can predict the future. They are those that can adapt to it faster than everyone else. The future will always remain uncertain, and that's the reality of life. Nobody knows tomorrow. But resilience is a choice, adaptability is a strategy, and survival is the leadership decision that you must take. I thank everyone for listening to me this evening. Thank you so much. That ends my presentation. I hope I'm still within time. So I'll move and answers. Thank you. Thank you.
Please take over.
Thank
All right, sir. Thank you very much for the wonderful presentation, sir. I personally learned a lot. And one of it is that we are, as chartered accountants, our job is to help the board management move from panic to adapting and to executing. That's a very powerful line right there. So we'll be taking questions and answers briefly. Oh, sorry,
Yes.
before then.
Okay. Okay, go ahead.
I'd like to call on the Vice Chairman of the Technical Committee, Mr. Kunle Jimber, for a recap of the presentation.
Yes, before Mr. Manager comes on, ladies and gentlemen, if you have questions, please let's use the chat box to save time. Kindly drop your questions in the chat box such that when the Vice Chairman is done with the recap, we can just take the questions in one full swing. Thank you very much.
Thank you, Mr. Kunle Jimber. We are very, very delighted to have you and to leverage on your wealth of experience. It's been a highly expository session. So much to take away in so little a time. We appreciate your accommodating us in this time and window. So we've been and all protocols duly observed, standing on the existing. And for members and people joining us from other districts and from wide and near, Nigerian and overseas, we appreciate your effort too. The summary is in 2 parts. We were given the overview of what it takes to survive during economic uncertainty. You know, change is the only thing that is constant, and that those changes will either be adverse or favorable. It's like 50-50. So at every point in time, we'll always be moving between turbulence. Even when you fly, there are times the plane will run into turbulence. I will be told that nothing to fear. It's just part of life. So we were given several overview, costs increasing by 25%, and regulatory shifts, you know, new tax law that all of us need to adapt to, either as an individual, as an entity, or whatever. external disruptions, the US waking up one day in February believing that why should the world be so cold, and start bombarding Iran and the rest. And then, but in the at the center of this, and by extension, we started importing inflation again, something we felt we have tamed. You know, inflation came back. And at the center of this, we were told reliably that 53% of our GDP is now in the service area. It's non-oil. In fact, that hits me seriously. Then that Africa is the new destination for growth. So it's either we position ourselves to play, you know, a role, is our grant, but the people knows the meaning of demographics, especially in population. They know that Nigeria, you can, if you are not in Nigeria, you are not in Africa. So that means more is still coming. And we're told that the gap in the infrastructural development funding is about 1.3 trillion, which is massive. Services is also a very big part of that, which we are already well positioned to play a role in. Then the second part on the flip side is to ask the question also, why do businesses fail? We were told businesses fail because people are in panic mode. They are not prepared for what is coming. Some people want to wait it. They are not doing anything like ostrich, just put your head on the sand and assume that you are hidden. Then the ones who finally survive are the people that adapt. So we're giving so many other things that can explain this further for us. Panic is not doing anything, allowing situation to be your driver and the rest. Wait is is neutral, but then it doesn't always guarantee that you will be able to ride the uncertainty advantageously. But people who adapt are people that realize that things are changing. What do I do to continue to be in business? They reshape, they re-engineer, they restructure so that the new reality becomes what they run with. Then at the end of it, we're given 6 strategies to take that can help us to cope with times like this. The first is that oxygen is organizational, cash is organizational oxygen. You must protect cash before profit. You know, you don't, because of just like MMM, CBS is the last one that came. Research showed that they went away with like 3 trillion, you know, and it is when people brings Excel rather than showing us what they produce. Why would people put money in such a program that is giving you ROI without telling you what will generate the ROI? So cash is king, profit, you know, protect cash before you talk of profits. Create a 13 weeks or a 90-day cash forecast. You can't be doing quarterly that, okay, we review twice a year. Because if you are not pursuing your cash, your receivables, it means you are comfortable. Those people will also be trading. You are subsidizing the inefficiencies of the economy. That's what that means. So that's first strategy. Cash is organizational oxygen. Second strategy for surviving this kind of time is that we must diversify our revenue stream. I was in a training program on Thursday, and I was introduced myself as I'm a man on the journey of setting up 28 automated streams of income. People look at me, 28. I said, yes, the new landlord of Nigeria is a bloody capitalist from Lagos. Even madmen knew that Tinubu was once a governor, and what is set up in Lagos makes Lagos the 6th largest economy in Africa. When you take South Africa, Egypt, Nigeria, you take Nigeria, you come back and take Lagos before you take a lot of other countries. So you can't afford to be standing on one streams of income. It's super dangerous. So we're told to diversify revenue stream. Diversification could be in products, in market, in services, whatever that means to us. Because remember, he said the service industry grew our GDP by 53% last year. That means the market is massive and deep, if you can put on a thinking cap. Strategy number 3, we should build strategic agility, scenario planning. You know, we must learn faster, decide faster, adapt faster, which means we have a base case, which is current place where we are. What if inflation increases by 20%? Worst case, how do we continue to survive? Okay, if inflation is this and it becomes better, all good. So we must have those three case scenario, always having them in mind. That's the third strategy. The first strategy is we should invest during downtimes. During downtime, when people are running away. You know, Warren Buffett says, be greedy when people are fearful and be fearful when people are greedy. You do the opposite of what the hedge is doing, so that when this is over, you will be having a front seat row around your investment. This is not the time to run away from expansion or from investment. It is the time to be planting. Ensure that when you plant, anyway, when you invest, that there's an 18 months minimum way out for you, so that if it's borrowed money you are using, you'll be able to put it back. The fifth one is that see risk as an integral part of your business, and you know, turn risk into an organizational asset. Let your risk register and so many other things that your risk people is bringing to you, flip it, because you know, for businesses to survive, it is managing of the risk that goes with it that gives you with the profit. You know, if there's no risk in what you are doing, there will be no profit in it. Then the sixth strategy is trust is a capital. Make trust a strategic asset. Ensure you build integrity into your business relations. These think win-win in all business relations. Trust compounds, and when the chips are down, if trust is lacking, even from the 5 C's of credit, if you want to go and get a loan from bank, the C part, which is character, is around you, it's around trust. And all other ones, if you lack the main one, that other ones, no matter how sweet your financials are looking, they may decide not to deal with you. Thank you very much, Mr. Jimber. That's the recap and summary for us. Over to you, moderators.
Thank you, Mr. Manager. Thank you so much. Before we go to the Q&A, we have some questions in the chat box and some hands raised. I just want to make an announcement that the attendance form for this session is being shared right about now. While populating that form, you would see a segment where we're asking if you would like to be a member of Lagelu and District Society. We just want to clarify that joining us at Lagelu, distance or location is never a barrier. As I am speaking to you at the Federal Capital Territory, I'm in Abuja. The co-moderator this afternoon is based in Kwara State. Several other members are in Lagos State. Other members are in Ibadan. So joining Lagelu, location is not a barrier. You can be relevant, you can be join us. Please make that interest known on the form, and somebody from the membership committee will reach out to you in the course of the week. Thank you very much, ladies and gentlemen. Over to you, Madam Peace.
Yeah, thank you very much, sir. So, our resource person, Mr. Kunle Jimber, there are some questions already on ground for you, and I would like you to help us do justice to them. I'll be treating the questions in the chat box first. Sorry, I'm trying to navigate.
Okay.
Yes. Sorry, just a minute. I've scrolled past the questions. All right. So the first question here says, it's from Mrs. Olabode Juniors, and she says, good job, sir. Please, in line with the lecture, I appreciate you to look at cash flow statements vis-a-vis cash savings as explained. Do you want to take that first, or should I go ahead with the second question?
Okay, maybe a little clarity as to what she's trying to ask as a question. Cash flow statement as to what? As against what?
Cash saving.
Cash savings. Okay,
Yes,
so cash flow does is to extract allocation of cash. So in your cash flow, it states your revenue projected. Do you understand? Then it states your expenses. You also know the constant ones, the variable ones, the projection. Then it gives you net flow. So if the net flow is positive, it means you have cash. Then you can now allocate how you can save. The rule of thumb always say that pay yourself first. So if it's a owner managed business, before you do any other thing, you save for yourself at least 10%. And let me sound a warning. The warning is that if you don't save before you spend, you will spend and there will be nothing to save because money is never enough. Do you understand? So it's a conscious effort. Savings is a conscious effort. So when you look at your cash flow after the projected revenue and then your expense, then the net gives you what the available cash will be. And then I talked about stress testing it. So you can reduce that. If you want to stress test it, you can reduce that revenue by say 25%, or in some cases a 30%, and then increase your cost by say a 10%, just to flip it around and see if the bottom line, because sometimes we like to be very ambitious with our projection and we don't make realistic cash flow analysis. So you may want to test it. Also, if you want to take credit from banks to fund your business, the outcome of your cash flow will determine whether you'll be able to repay, because that's money you're borrowing, loan you're taking now forms expenses, and then you now see if the revenue will be able to cover. So it's expected that the money you have borrowed into the business is like an asset you've reintroduced, and that money should naturally increase your revenue. For example, if your revenue from month one says at 1 billion and you've gone to borrow 200 million, it's expected that month two, if there's a moratorium, let's say month three, your revenue should grow from 1 billion to say maybe about 1.3, 1.4. If that is not happening, and then it means your business is probably not ripe to borrow money. Do you understand? Otherwise, you just get an asset that will not your current liquidity. I hope that satisfies our question.
Yes, sir. Thank you very much, sir. So the second question here says from Olaniranji Oluwafemi. Sir, some years ago, I got some shares but was unable to claim the dividends. It's not totally relatable. How will one be able to claim those dividends?
Okay, I think there was a pronouncement last week. The president said all unclaimed dividends, they should channel it to NEL Fund to go and be funding student loan. I know this is maybe part of your money has gone to that also. And claim your dividend. So all you need to do, one, I always advise that people dematerializes all their share certificates and take it to CSCS. CSCS is like stock exchange for stocks. So when they dematerialize, then you give a mandate to say all my dividend automatically should be paid to X account. I want to give that standing instruction. They will do, but you will need a stockbroker's opinion and service to be able to do this. There was a link that was given out to people to check if you have a claim dividend. I also checked, I have some. So you need to take the pain to write each registrar of something you've bought their stock. Do you understand? Or go to a stockbroker who will now give you some advices. They might charge you a bit for it, so you wouldn't mind. But at least you get your records straight, get your stocks together in one portfolio, and then you can manage it going forward from there. Yeah.
All right. Thank you very much, sir. I can see some hands raised. We'll get to you shortly. Apologies. Another question from Mr. Dele Ogunjobi. He says, what's the strategy specific for a new consulting firm to survive, coming from regular income as a salary earner to no income as a consultant?
For a new business to survive, we believe that you always work from the known to the unknown. For example, you've built your career over some period, you've managed some companies, you've managed some customers from where you were previously working. So it's always good to do a deep dive analysis to say, I'm starting my company. So it's like you give yourself a probation period of say 12 months, 6 months, or whatever, to say, okay, who are the customers that are willing to go with you? Now, the concept is that you cannot be in the illusion of pricing like a name brand. You understand? You must be willing to give concessions for you to get patronage. For example, where you were before, they were charging, say, 1 million for this service. Do you understand? You were getting it because you're working for a brand that has a goodwill. You can't compare the goodwill of Coca-Cola to the goodwill of one company on the road that is producing Zobo, and they are calling themselves. You can't compare the goodwill. So when you now start your own, the same service that you were able to charge 1 million with a name brand, you might be willing to, you might think now that you have to drop the price, factoring all your costs. Maybe if you now say, I will charge 400,000, that will be a reason for some of the people who have known you in the past to come to you. So it is when you now start to build name for yourself that you can also start to increase or improve on your own charges. So you have to start small. And there's a concept in pricing, even though that's not the focus of our discussion today. There's a concept in pricing that they call freemium pricing. So freemium is a name derived from free premium. So it means that you offer something for free, but it's the appetizer that you offer. So when it comes to the main course, you charge for it. So and that happens if you play games. For example, I don't know who plays candy, bubble candies, or all those things. When you play those games, there are versions of those games that you play for free, and then they can say you play for maybe 5 minutes. When you are not getting to like that game, and you're getting entrenched in it, do you understand? That's when they now start to introduce coins. So you get to a particular point, and I almost caught that point to, then they say time up. For you to play, you have to buy 10 coins. 10 coins maybe is 1,000 naira. So that is freemium pricing strategy. So you offer for free. Then when you've hooked the person, then you charge. Do you understand? So there's something that draws them into the net. And then after that, you now charge for the other services. So there are various ways or strategies you can adopt for a new business, but you must know that as a new business is a risk you're taking on your own capabilities and credibility, and you have to leverage your existing clientele base for you to be able to do it at a much lower price. Yep.
Thank you very much for that response, sir. To everyone asking for if the recording and the slides will be made available, yes, it will be made available after the session. Thank you very much. We have one more questions to go, and then I would attend to those with their hands raised. How can accountants project risk and mitigate against risk during inflation? This is coming from Omonaye Emmanuel, Mr. Omonaye Emmanuel. How can accountants project risk and mitigate against risk during inflation?
Okay, well, risk projection is always very evident to everybody. So like today in Nigeria, we are not bereft of the problems that we have as a country. Everybody knows that energy is still a major problem in Nigeria. Everybody knows that security is a major problem in Nigeria. Everybody knows that insecurity, unemployment, there are still major issues in Nigeria. So risk is evident to everybody. But as an accountant, you need to now go below the surface and using your own expertise and your own learnings to say, okay, and it's business specific, so because you cannot generalize solution to risk. Now, what poses a risk to me may not pose a risk to Mr. Ayokunle. Do you understand? What poses a risk to Mr. Ayokunle may not pose a risk to Mr. Okwe Akoni. Do you understand? So it's specific now that you now need to do a deep dive into it. And inherent in every risk are opportunities. Do you understand? For example, today, Yoruba adage always say that it means that so the prayer is that do you understand? So there is risk in every facet of life. Sleeping and waking up. When you go to bed is also a risk because you don't know what. Do you understand? We only pray to God to say, God, as give me a sound sleep. Let me be able to wake up tomorrow morning and give glory to your holy name. Do you understand? So it's also a risk. So in every situation, when we have it, it's always case specific. And where if you need further consultation on some of those things, we can sit down together and have a session to so that we don't give a generalistic approach to it.
All right, sir. Thank you very much, sir. To those with their hands raised, please try to keep your questions as brief as possible to help us save on time. And I will be starting with Mr. Akim Atonda. Kindly unmute. Thank you, sir.
Okay. A very good evening. Thank you very much for that session. So all protocols duly observed. Please, Mr. Kunle, I got interested in that part when you said you worked with someone and then you moved an account balance from 50,000 to 50 million. Please, I'm interested in that part. Can you expatiate on it? Thank you.
It's actually from 50,000 to 2 billion. So this is what happens. Most times when I'm a financial marketer. So when I was working in the bank. So sometimes, people will go to a customer and start begging the customer to open accounts. And the perspective to which they are approaching the customer is the perspective of, I want to make, my target is 100 million that they have given to me to meet. So you now go to the customer, you're saying, please help me. My target is 100 million, this, and that. Now, what you have done to yourself is that you have told the customer the limit of what you're looking for. So two things will happen. If the customer does not have capacity to meet that 100 million for you, the customer will block you and say, next time, I don't think I'm the right person you should talk to. You lose that customer. If the customer has more capacity, the customer will not be willing to expose that to you because what you have asked for is 100 million. That's what you've said your target is. Do you understand? Now, the approach is such that when you engage a relationship, you need to first understand what the customer does. Do you understand? So what is even your business? What do you do? Do you understand? Irrespective of, you are not saying this, you're just saying, please come bank with me. That's what I would say. Come and bank with me, open your account. I can do this, I can do that for you. I can provide advisories for your business and all those things. So when I open the account, and then I started relating with the customer, I'll go there on a cold call to visit. You import from China, or you sell to those people. Then I started getting value-oriented documents. For example, the 41 exclusive items that they said is not valid for FX, I gave it to him and I explained that if you want to trade in any of those things, you cannot bid, you can't use Form M, your Form M must be non-valid for FX to do this, to do this, to do that. So the customer started getting interested in me to say, so any decision he now wants to take, he runs it by me to say, I even have a 200 million somewhere and I'm keeping it to do this and this. So now I've gotten information that there's a 200 million. Do you understand? So my thinking is now, how do I provide a service so that I can bring that 200 million to me? Do you understand? So by that relationship, the customer tells you everything he wants to do. Then you can actually see the net worth or how big this customer is. And with that, you get the business. You can see the difference from me going to the customer to say, please, they give me target of 100 million. I need to meet this 100. It would have just given me the 100 million. I say, let me just rest. Take this 100 million, stop disturbing. And then some people, relationship managers, the moment they get that 100 million, they may not call that customer again for the next 6 months until the day the customer brings instruction to say, I want to liquidate my money. That's when they will start running helter skelter, and customers get irritated. You say, you are just interested in my money, you are not adding any value to my business. So I won't be the one to tell a customer not to take his money, because when a customer is confident enough that if I give my money to Kunle, the day I need it, Kunle will not say don't draw. I will encourage the customer and say, what do you want to do? So I'm paying my importer from China, I'm doing this. I'm okay, fine. You pay, I process the payment, you go. When he's making sales and the cash flow is coming, it comes back to me because the guy is rest assured that when my money is with this guy, he will not. Some people will go to their customer when they give them check to draw. They will say, no, guy, you can't take that money today. Please, can you leave it for another 1 month? And my appraiser is coming. That is selling emotions and sentiments. That will not help you and grow your business. You must sell from a position of value. Your customers must see that you're adding value to their business. The relationship must be symbiotic and it must not be parasitic. Otherwise, you will lose such a customer. I hope that clarifies it for you.
Yes.
Okay, thank you so much, sir. Before we go on with this session, we'd like to recognize the presence of some very important personalities in our midst. We'd like to recognize the presence of the immediate past chairman of the Lagelu and District Society, Chief Mrs. Omokemi Oladipo. So good to have you in our midst, ma. And also Elder Marcus Akobi, the Lagelu and District Society patron and partner, Bikatili, Nigeria. I would also like to recognize the presence of Mr. Zaka Bala, the past chairman of Ikeja and District Society, as well as Mr. Temitope Fagbola, the technical secretary for Oluyole and District Society. Thank you so much for gracing us with your presence today, sirs and ma. Moving forward.
Hello, thank you for the recognition.
Yes,
can I go on?
Yes,
hello. Okay, thank you very much for the recognition. And I want to especially appreciate Mr. Kunle Jimber for that very, very interesting session. We appreciate everything you said from A to Z. And I want to admonish our people that it is one thing to listen to all of these things. It's another thing to put it into practice. We should just endeavor to try and put it into practice so that you actually have the benefit of the session and the program. Thank you very much, and God bless you all.
Amen, ma. Thank you so much, ma. So, for the last question, we have Mr. Umar Dauda. You can unmute, sir.
Okay, thank you very much for the opportunity given. I remain that Umar by name, immediate past chair of Dusa and District Society, far from the north. I really appreciate and be grateful to be part of you this evening. My question is that I don't know, for small operators in the environment, SMEs normally, you may tend to have a client that's, registered and operates maybe 2, 3, 4, 5 companies, and they are being faced with a lot of challenges, especially with the economic downturn, which is real. So, is it professionally advisable to ask those clients to make like a kind of consolidation to maybe register one entity to oversee all that you're doing so that it will look like a portfolio that you are controlling, instead of having like 5 registered companies operating differently, filing differently, reporting differently, everything different. So is it wise to advise such clients, such investors, to maybe register like a holding company that will be making a kind of an supervisory role, so that it will be controlling all the entities at once? Thank you.
Okay. Thank very encouraging question from the far north. You see, some people just want to, when we say diversify revenue, they will now open different business names. Even 10 business names is even not up to 1 in some cases. Do you understand? So I think you're very apt. You need to maximize the potentials of a particular business before you go and open another one. And you need to have been seen to have been able to manage that business very well before you now go and open one. For example, somebody who, let's say, selling rice. It has one business name for rice. It has one business name for beans. It has one business name for yam. Do you understand? All this can work together in one portfolio, and then you can centralize them and monitor them very well. So I think you're very correct. Do you understand? But some customers, they like the prestige of being called group CEO, managing director, X and X company, and so on and so forth. So you are very apt in advising such a customer, especially when you look at it from the point of these businesses are similar and interwoven and related. You can consolidate them into one portfolio and then manage them from there, rather than having to deal with different filing issues and all those things. Yeah. So, Mr. Oba, is that
Yes. I think it is a very good one. Only that you see some of those people, they will feel like they need all these companies, and it's like they are all profitable, but only that for them to have managed them at once, it's given them headache. So maybe they are looking for a kind of a professional advice on how to go about doing it. Maybe can they open like a holding company so that it will look like not a group? Sure.
I understand what you're saying. Them do it, especially who protect contracts. So like 5 different names to submit bidding for a particular contract. In fact, the ministries, the agencies, they encourage them to do it. See, if you have like 3, 4, 5 business names or registrations, just bring it to bid, so that at least one, it will look like you've met the criteria for tender and all those. So out of, so if that for reasons you validate by having a subsidiary. But then if the or the UBO of the owner, you understand, it will still come down to these companies are related some way or the other, because now CBN has also given directive, and EFCC have also given directive to say UBO effect really carry of the same group. It also defeats the purpose wanted to do. So if that is it, you just continue to, if you are consulting for them and they are not tired of paying you, are you also tired of collecting money? Why not just be collecting your money across all? So that's my.
Thank you very much. Well done.
Well done. So, Madam Peace, are we cool, or we still have people with questions?
All right, so that would be all the questions that we have now.
Okay,
sir.
thank you very much.
The session was really good having you here with us, and we look forward to inviting you some other time.
Yeah, so let me say, our friend, the president, Elder Patterson, I was supposed to be around for his investiture, but unavoidably away because I was celebrating my 58th birthday. So sorry, my president, like I used to call it. I hope you pardon me for that. So I look forward to also joining your future sessions and sharing and also gaining knowledge and insight from the members there. I think I have a couple of friends there. Kunle Jimber, I think we've worked together in one organization or so together. So thank you all for having me.
Before you go, I want to correct you. I'm not the president, I'm the chairman.
Chairman.
Yes.
Chairman.
Thank
you. President in church, so chairman. All right.
Well, thank you very much, sir. And belated happy birthday to you as well.
Thank you very much.
Yes, I would also like to recognize the presence of Mrs. Abosede Kukwala, the treasurer for Uliole and District Society. So good to have you now, Ms. Ma. Also, we have Mr. Emmanuel Omonaye, I hope I got that correctly, Head of Final Accounts, AMTI Ilorin. We are glad to have you join us on today's technical session. and I hope you had a wonderful experience. So I will be handing over to my colleague now, Mr. Temitayo.
Yes, thank you very much. Thank you. It's been a very impactful afternoon for everyone. The opportunity to learn has been very, very wonderful. Just before we go to the next item, where we'll invite Vice Chairman Dr. Debumi to appreciate our resource person for today, I would like to seize this opportunity to intimate us of our session that is coming up in the month of September 2026. Of course, this forthcoming session has been put together by the technical committee in conjunction with the membership committee. It is scheduled to hold on 20th September. That is the penultimate Sunday in September 2026. The theme we'll be looking at on that day is career development, personal branding, and leadership for accountants. I repeat, career development, personal branding, and leadership for accountants. As it is in our technical session, it promises to be an engaging, impactful session that equips accountants with insightful learning opportunity such that we can build successful careers, develop strong personal brands, and strengthen leadership. So please, ladies and gentlemen, please make it a date with us. In due course, the flyers and the promotional rounds will commence. We look forward to you joining us at the Prosperity District on that day so that we can thrive together. At this point, ladies and gentlemen, I'd like to invite to the microphone the Vice Chairman of Lagelu and District Society, Dr. Yemi Odebumi, FCA, to help us on behalf of the district and everyone who has joined this afternoon to appreciate Mr. Kunle Jimber for doing such an excellent job. Thank you very much.
Thank you, Mr. Temitayo, and your co-anchor, Ms. Peace Kunle. Thank you very much for a job well done. In fact, this is an insightful and eye-opening session for all the members of ICAN, Lagelu, and District Society. We are on the path of prosperity. I can see prosperous members in Lagelu because they've opened our eyes this evening. In the light of that, I want to say on behalf of our chairman, Elder Patterson Arem Digo, we want to extend our sincere gratitude to our paper presenter, person of Mr. Kunle Jimber, for sharing these powerful insights on this great topic, business survival strategies during economic uncertainty. Mr. Jimber, your approach to navigating the market volatility and the economic as a whole, and your specific point on sustaining business resilience, I can say they are incredibly timely. And as I said earlier, they are eye-opening for all of us. I want to say a very big thank you for honoring our invitation. And I hope anytime we call upon you, you will be gladly and be able to attend to us. Thank you very much.
Thank you very much, sir. I do appreciate as well. Thank you very much.
Yes,
And thank you for this award of appreciation. I can see it displayed here. Thank you so much. Thank you.
Once again, Mr. Kunle Jimber, thank you. In due course, we'll arrange how to get this plaque award to you. So please accept it as token of gratitude. It has been a wonderful session in every sense of the word. Thank you so much.
Thank you. That's okay. Thank you so much. Yeah.
Okay, before we close the session this afternoon, I would like to also remind us that you can join Lagelu and District Society regardless of where you are based from all over the world. Our doors are open, our arms are wide open to receive you. We believe as a professional, you have value to add to us. And of course, we believe that through our tailored programs, we can also impact your career in so many ways. So please, if you're interested, kindly reach out through the form that we dropped in the chat section and indicate that interest. Thank you very much. Before we close the meeting, I wouldn't know if the chairman has a word or two to share before we bring the meeting to a close.
Yes, my closing remark would just be to appreciate everyone, our patron, our members of other districts, and everyone that have taken time out of their busy time to attend this session. In Lagelu and District Society, it is a district where we collaborate, unite, and thrive together. And so prosperity is our logo. And so we encourage all of you out there who have not yet joined any district to please, like my brother said, join the district where we prosper together. And the next technical session, I believe, in terms of quality, it will not be less. So I encourage all of us to join that session that time, and I wish you all a happy night rest. Thank you, and God bless.
Guiding lights, we pave our way. We fight the overuse, we lead our way. We are Lagelu the streets, and it all as one. With unity and strength, our journey has begun. Integrity, accuracy, and in us is name. We fight the overuse, we lead our way. Treasure in triumph of an array, standing stronger in harmony, building a land together. Dreams of a founding fathers, we are striving to attain our roots and values that we share through all ages we sustain. Institute of Chartered Accountants of Nigeria. Know who I can, know who I can, your accuracy we cherish. We uphold your integrity.
That's it, all, ladies and gentlemen. Thank you for making a date with us. We sincerely appreciate you. On behalf of my co-anchor, Ms. Peace Benley, thank you and see you again in September. Thank you.